It's August. I can't believe it. It's already August. That is crazy to me. Well, happy August, everybody. As I say that, I also realize my slide says July. I just realized that as I was starting this. So sorry, it's August 1st. It's going to be a rate intensive sheet this week. And the reason being is lots happened. The Fed spoke yesterday. Tomorrow, job reports comes out, and rates are finally trending in the right direction. You see here per Mortgage News Daily, they're sitting around the 6.62. And again, as I just mentioned, rates have gotten better. They're trending the right direction. So here's a picture. Remember, green is good, even though it's going up. In this case, the way it's tracked for mortgage-backed securities, that actually means lower rates. So you can see this last week and a half, we've been on a really good run. So good for us. And truthfully, if you look back from July through now has really been a great month, right? So good for July. Moving into August, we'll see if we trend the same way. I'm now showing you the 10-year Treasury. The reason why is because I think it's important to note. So if you look, again, it's opposite. It mirrors what you saw from the mortgage-backed securities market. This is a 10-year Treasury note. Why is this important? Even though the two technically, like the 10-year doesn't determine mortgage rates, they usually kind of work hand in hand. And here's why and how. If you guys look at this, this is the spread, meaning the difference between a 30-year fixed rate and the 10-year Treasury, right? So if we take the 30-year, if rates are, I'm making this up, 7%, and you say, okay, if the 10-year Treasury is at 5, the difference between 7 and 5 is 2. And you can see going back through 2013, give or take, you can see this little squiggly line. And for the most part, the spread until 2020, the biggest spread was usually around 2%. The least amount was right around that 1.4, 1.5%. So why is that important? Well, today, guys, and you can see COVID obviously, screwed that up, and all kinds of things have been happening in the last 4 years. So it's not normal, but in a normal rate environment, the spread's about a 1.5 to 2 point hit. And the reason why that's important is that the Fed, is now about to cut rates. So they're meeting that, and I'll give you the recap here in a second. But the reason why that's important is think about this: the 10-year Treasury is right around 4%. Just went under it today. It's 4%. So if you say, okay, rates historically are about 1.5 to 2 points higher, in theory, we should be around 5.5 to 6% for our rates. So that can be where we're heading. So as the Fed talks about, when they're going to cut mid-September, you can see I've highlighted it here. I'm not going to go through the whole thing. But the point is, guys, yesterday the Fed says kind of leave themselves open. They didn't quite say like, oh, we're gung-ho, we're going to do this, but they're basically expected to cut mid-September for the next meeting. They don't think there's going to be a big one. They kind of just left the door open. They did acknowledge inflation is getting better. They did all vote to basically leave the yesterday's meeting unchanged. But at the end of the day, September is kind of where the money is saying it's going to happen. So unless, and this is one more little highlights from it, unless something big a surprise happens, they're thinking it's going to be 0.25%. So one rate reduction, if you will. If you don't know it, they say, oh, that's, two, they cut twice or whatever it is. A lot of times it's 50 basis points, but I think it's going to be at least the one cut in September. And then they use the word, it's a process. When asked if they think they're going to do one or more, whatever it is, it's a process, meaning it won't just be one. It'll be a series over and over and over. And for the record, Bank of Canada, Bank of England, they've already cut their rates. So we'll probably cut ours. And so as we cut, we do expect to see lower rates in the future. I saw this, throwing it in there. It's just the trend of apartments. We've been saying this for a long, long time. The trend's coming down. You guys can see in this chart, goes up, goes down, goes up, goes down. So this is also going to continue to help inflation. So at this point, they're more focused on jobs, which is coming out tomorrow. So we'll see what happens there. Consumer confidence, I was a little surprised by this, apparently went up in July. So that's good. Consumers are feeling a little better. I'm not sure why, but good for us, good for them, good for everybody. And the confidence, I thought this was interesting. Dallas-Fort Worth ranked number 1. And this is old data, right? This is new homes closing in 2023. But a part of that, you guys can see the little bubbles. Dallas-Fort Worth, go us. One of the biggest bubbles, if not it looks like the biggest bubble. Well, it is. It's number 1, right? Houston's number 2. But you can see the bubble size compared to the others for the top 50 markets for where new homes are being built. So good for us, good for Dallas-Fort Worth. If consumer confidence goes up and stays up, if rates come down, it should mean really good things in the near future, I would think, from a housing market standpoint. So that's good. A $1 million starter home, apparently in 237 cities, that is normal. Who knew? That's really expensive. So nationwide, the typical starter home is around $200,000. This is all coming from Zillow. But apparently 237 cities, it takes $1 million to be in a starter home. Who knew? All right. Nashville, apparently ranked among the nation's top luxury market. Good for Nashville. For those that are watching, because I know I got a couple fans out there. School district and land are basically the two reasons why. People wanted more space. Nashville can provide that on the outskirts, outside the city. And also the school districts are apparently pretty good. So I could probably make some jokes about the, Tennessee and, Kentucky and all that stuff for school districts, but I won't because apparently they're winning. So good for you guys. Fun read. So Olympics, man, I've loved the Olympics. Been watching it every night. Apparently, Lily, a 6-time national champ and 4-time Olympian, still to this day has her parents harping on her about getting a quote normal job. Lily, you keep doing you, girl. Apparently, something's working. I did not know this. Apparently, it's illegal to distill your own booze. I know you can make your beer at home, and I've done that before, and I've done that with a buddy who actually took it more serious than me, but I've done it myself. It wasn't very good beer. That's why I only did it once. But the reality is, apparently, there was a law, 156-year-old ban for making your home spirits, your own liquor, your gin, your vodka, whatever. So apparently, that's going to be going away here in Texas. So good for us. I don't know that I'm going to do it. Actually, I know I'm not because that just seems like a lot of work, but I just thought that was interesting to share. Guys, I've been promoting this for those that have used it. Good for you. For $1, my buddy Connor's doing something that he's calling his listing launch media kit. It is awesome. It is great. It's wonderful. If you want to use that QR code that's showing up or just, ping me, text me, whatever you want to do, I'll get you Connor's information. He's a good dude, does great work, and it's a whole whopping $1. So there's really no risk to doing something to at least try it and see if you like it. And lastly, guys, I love this. When they asked me to lead training for the new hires, good old Matt Foley, God rest your soul, Chris Farley, gone too soon, right? Super funny. Love the man. Love the meme. Guys, as always, get social, like, subscribe, share, all that fun stuff. You know what to do. And reach out if you need us. Happy August. I can't believe it. Hope you guys have a great and wonderful day, great and wonderful week. And we'll be around this weekend if you need us. Bye, everybody.